I'm Tariq with Event Hawk. Thank you guys for tuning in. Today is a very special webinar that I'm super excited about. This webinar literally changed our business, changed our lives, and it's all about getting paid, how you guys can get paid as party-rental business owners. And like I said in the description, what I'm going to be talking to you guys today about is actually based on the book, Profit First. Awesome book. I read the book, so I'm going to be sharing you guys kind of what I think about the book, how I implemented the book. And really, one of the big reasons I'm doing this today is because just when we were at IAPA at our booth, I expected a lot of people to come talk to me about Google Ads or Event Hawk, and they did, but so many people came and they said, man, Tariq, thank you for telling me about Profit First. Thank you for telling me about paying myself. We've done this. We've been in business for 5 years, 6 years, 10 years, and we've never thought to do this. And after doing it, it's literally changed our lives. We actually pay ourselves. We actually make a decent living. We actually feel a lot better about working all the hours that we work. I'm like, wow, this is definitely something that I know it made a big difference on my life, but it was really cool to see how many people it affected as well. So today I'm going to be sharing with you guys specifically what the book is about, how I changed it, kind of implemented for our business, and also I'll share a spreadsheet with you guys. I guess you guys are fans of spreadsheets. So let's jump right into it here. I'm going to go ahead and make this smaller, and you guys should be able to see my screen. So anybody who's interested in the spreadsheet, go ahead and just put spreadsheet in the comments, and I'll go back after the fact and share the spreadsheet with you guys. Basically, Profit First is a book that talks about paying yourself first, prioritizing yourself, not waiting to pay everybody else until nothing is left in the bank, and then going ahead and paying yourself. And when I read this, it was like, oh, that actually makes sense. But then the more I read about it, the more it was like, wow, how did I not do this all these years? So essentially, the book talks about creating 5 bank accounts. So I put 4 here, 5 bank accounts. So it says make 5 bank accounts, and you have to transfer money 2 or 3 times per month. For me, honestly, when I read the book, I was blown away. I was super excited. I was ecstatic. And then I started to implement it. I'm gonna be honest, I got a little overwhelmed implementing the book. I got a little discouraged, and I kind of started to drop the ball. So what I'm going to share with you guys today is a modification of the book, because like I said, I went to my bank and I did everything that was recommended in the book, and it just got to be it got to be a little discouraging because I couldn't really follow through 100%, just because it is pretty involved. So what does the book Profit First talk about? Go ahead and read the book. If not, if you don't want to read it, then I'm pretty much going to summarize it for you. The idea behind Profit First is that you create 5 bank accounts, okay? I ended up going with 4. Instead of putting, the problem is, we go ahead and so if you make $50,000 this month, okay, $50,000 in bookings, then this $50,000 is up for grabs. You can spend, just keep spending. It's like a big endless barrel, and you don't really feel like you're spending because there's 50 grand in there. Whatever the amount is you make per month, think about your busiest month. If you made 50 grand that month, 20 grand, 100 grand, whatever it is, as long as you're spending out of the same account that your income is going in, it's like you just keep reaching in and you don't feel it, right? So the idea is that you split up, all your income goes into one account, and then all your expenses come out of one account. Okay, but if the income is going in one account, who's going to pay for the expenses? Well, the idea is that you allocate a certain amount of money for your expenses, right? So it starts with just a prediction, or you can go back and you can, do your math and see kind of what it would be at. But basically, all of your income goes into one account, and then you take a percentage of that and you put it into the expenses account, and you say, that's all I'm allocating for myself for expenses. I'm not allowed to spend more. So a good number to start with is, let's just say 50%. So before it was 100%, right? 100% of your income is up for spending. No, now you take only 50%. So if you made $10,000 this month, then you're only allowed to spend 5, okay? And you'd be surprised. I mean, honestly, if you're spending more than 50%, then you really need to look at everything. And I'm not saying, I mean, that's really just looking, because there's more that comes out of it. Remember, this is only day-to-day expenses. This is not paying yourself, right? This is not savings, and this is not taxes or anything gets paid out at the end of the year, right? So what you want to do is all your money goes into one account. You're going to create a second account, and you're going to take every, the book says the 5th and 25th, I think, of the month. I decided to do it every week. It works a lot better because if I did it every 2 weeks or every 3 weeks, I would just drop the ball. But if we do it religiously every Friday morning, we go into our bank account. It takes 5 minutes, right? We look at all the money in our income account Friday morning, and if it's, let's say, $10,000, we put $5,000 in the expense account, and that's all we're allowed to spend. If we have to spend more than $5,000, then obviously we're not going to, go negative, but we're going to kind of really take a hard look. Why are we having to spend more than 50% of our income right off the bat on day-to-day expenses? Hope that makes sense. So that's essentially what it is. But then there's other bank accounts. So the book recommends that you create three other bank accounts. So it recommends 5 bank accounts: income, expenses, I think taxes, your pay, and then like a savings account, right? The taxes one was hard for me to keep up with just because we don't, for however we run our business, we just pay it at the end of the year. We do make payments towards it, but it's like we have such a short season that I just really didn't. I kept stealing from that account, so I just kind of bundled it into the savings. So what I'm about to share with you guys is how we have modified the book to use it for us, and it's made a heck of a difference. If you guys have heard me talk before, our business has caused a lot of problems in my marriage, right? Because I'm the type of person where I love my business, and every penny that I make, I dump it back into business, and I buy more stuff, and I buy more inflatables and more trucks, and I just grow. My wife is just like, all you do is work, and we're not seeing any money. And I'm like, but we're building an empire, It's like we're building this big thing, and it's okay. We'll get paid one day, Once we're reinvesting in ourselves. When COVID hit, I mean, we just totally changed the way that we thought, but that's kind of what triggered it. So ever since reading this book and implementing this book, the way that I'm about to show you, I started paying my wife, right? She got paid and I got paid. And she has a totally different attitude about work now. She's actually excited to work. She actually pinpoints our expenses, and she's like really tight with looking at, well, how can we spend more this week? Or where can we cut things? She's a lot more involved because we now get a percentage every week. She wants her percentage to go up, so it's to her interest, it's to her benefit to go in and look. Ever since then, she's remodeled our house. We got a nice car finally. Our delivery guys, our 18-year-old delivery guys were driving nicer cars than us. So we got nicer. We started buying nice things. We started taking care of ourselves just from our party rental business and paying ourselves. And we still have money left over to buy more equipment. We just allocate a separate budget for it. We don't go to IAPA and just go bankrupt for it. We allocate a budget. We do go over. I'll admit, especially all the stuff Jana be posting. I'm just like, maybe just one more. We're gonna make our money back in 8 rentals. We can do this. It's totally worth it. But again, it's easier to have that mentality when she's getting paid, when I'm getting paid. We see the fruits of our labor every single week. When my guys get paid, I get paid, right? It never used to be that way because there was one year where we paid everybody, and then at the end we were doing our taxes. I kid you not, we made less than minimum wage. I'm not even kidding. Like when we looked at it, like, man, we paid our guys more than us. We made less than minimum wage that year, and it was really, really depressing. So basically, this is how we do it. Let me go ahead and jump right into it. So you should already have 2 of these accounts. You need 4 bank accounts total. You should already have 2. You already have a personal bank account, right? And you should already have a business bank account, right? So you already have 2 bank accounts. You should at least have already 2 bank accounts. Your personal one, for sure you have. Instead of just having 1 business bank account, you're going to have 3 business bank accounts, okay? All of your income from your credit card processor, from wherever you get payments, should go into 1 account. No expenses whatsoever should come out of that account, okay? Your expenses is where all of your expenses. This is going to be your payroll, your gas. 100% of your expenses are going to go out of the account. And then savings is what you're going to use for your off season. If you're like me, we have a 6-month off season pretty much where we don't have any income coming in. So we take a percentage, and we know how much our off season is going to cost us. So we just divide that up, and we take a percentage every week to go towards our off season. Once we hit that magic number, we stop putting into savings because we know how much our off season is going to be, estimated taxes, all that good stuff. So we do that here. And that's also for our inventory, right? For new inventory, we just allocate a percentage of that. We say, this is how much percent we're going to put there. And then our personal account. So let me show you guys in real numbers what that looks like. So basically, you are going to, let's just say you make $10,000 this week. I recommend doing this weekly. You can do it, there, this says making per month or per week. I would say weekly or bi-weekly. And again, if you guys want a copy of this spreadsheet, just go ahead and put spreadsheet in the comments, and I will go ahead and send this to you afterwards. But let's say you make $10,000 this month, okay? You have a profit percent, okay? This is for you. So this is what you're gonna make. So let's just say your pay percent, expenses percent, and savings percent, okay? So this is your income, $10,000, okay? You have to decide on these numbers, okay? I'm gonna give you guys some baselines, all right? So this one, if you wanna be safe, I would recommend you do 50%, okay? Savings, this is going to be for your off season, you know, you could do like 30%, okay? And then your pay would be 20%. So basically, out of every $10,000, you would move every single week, you'd move $2,000 to your account. Sounds nice, right? You'd make $2,000 a week right off the top. If you're only making 10 grand, you make $2,000. 5,000 goes towards expenses, and 3,000 gets moved to savings. This is your nest egg. This is for emergencies, taxes, buying new inventory, off season, anything like that is going to go here. And that's pretty much it. It will literally change your life. So with the as you like with my spreadsheets, you only fill in the green cells, you do not fill in the gray cells. So let's take a look here. How much do you want to make a month, right? Or how much do you want to make for your pocket? Okay. So how much would you like to make? Let's say, you know, Tariq, I want to make $5,000 a month. I'll be happy if I can make $5,000 a month. Well, how much do you actually make, you know, per month? So let's just say you made, you know, in your busiest month, you made 20 grand. So you would need to, your profit would be 25%, and you would need to lower your expenses to, what is this? You would need to lower your expenses and your savings to 15,000. So your expenses and your savings would have to share this 15,000. Sorry, I had to read it. So this one might be a little confusing, but essentially, if you're, so let's say you're working like a part-time job, and you're like, okay, Tariq, well, for me to quit my part-time job, I have to make $7,000 per month. Okay. Well, in order for you to make 7,000, if you're only making 20,000, you have to cut your expenses and your savings down to 13 grand a month, right? Or you could just make more money, right? You could focus on growing your business, on getting everything actually rented out every weekend. So you want to have that biggest gap possible between expenses and what you're actually making. So if you're making $30,000 per month, then you can spend a lot more and put a lot more into savings. So this part can be a little confusing. It's just kind of something that I use to kind of guesstimate when I was trying to quit my job to see how much I had to make for me to be able to quit. So I'll send this over to you guys. But this one here, this is all it is, guys. You just need 4 bank accounts. Now, I'll tell you guys my experience, and the book actually mentioned this. When I went to my bank account, because I followed the book to a T, and again, it got to be a lot more. And they're like, why do you want to open 4 bank accounts? I was like, well, I read this book, and like, well, they will push back. They will make you feel dumb. And the book actually says, like, somebody's gonna make you feel dumb. Your bank is gonna, and they recommend that you go to some other type of bank or something. I didn't do that. I just told them, listen, this is what I want to do. You want to work with me or not, right? And they're like, okay. My accountant was like, what is going on? Why are you making all these transfers every week? I'm like, dude, this is how I'm gonna do things. And you know what? I used to have to wait. You know, we grew to a point where we hired an accountant, and they send us a statement, like a profit and loss every quarter. Usually they forget, but I had to wait like every 3 months for me to find out how my company's doing. Now I know how my company's doing every week. I just look at my bank account. I see my savings account go up, 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 20 grand, 30 grand, 40 grand, 50 grand. Every month my savings account is having more and more in it. And my expense account, I always look broke, right? If you look at my expense account, it's always like near E, because I only allocate a certain percentage to my expense account. I'm not allowed to spend more than that, right? Now, a big part of it, once you start to do this, you're going to realize is payroll. That's a big part of it. So the next spreadsheet, I only have one more spreadsheet for you guys today, monthly accounting. I love this spreadsheet here. This is like my favorite spreadsheet. I spend most of my time in here because my wife runs the party rental company. Her and I meet and we look at these numbers. and we're like, we just look at the highest number. So what this is, again, I encourage you to have an accountant. At some point, you should have somebody helping you with your accounting, but you should also do your own accounting. It's not hard. If you do it weekly, honestly, it takes you half an hour between accounting and paying yourself, you're done. So what we do is at the end of every month, we take all of our income, okay, and we put it in here. So let's say this month we made $30,000, okay? Remember, the green ones are what you fill out. The gray ones you do not touch. Payroll. You should be able to look. You should calculate your payroll all together. And let's say your payroll is $10,000, okay? And then this is gray, so you don't touch it. These are like most of the expenses that we have. Insurance, website, marketing, equipment and maintenance repairs, vehicle rate maintenance, security system and cameras, electric, internet, gas, phone, processing fees, warehouse supplies, donations, office supplies, deductible meals, employee appreciation, uniforms, truck rentals, account and tolls, and miscellaneous paid. Where's rent? So I have rent now. I think rent was at the top and it got deleted. Start one row above. All right, so rent should be right here. Why not have rent, really? Okay, so all you got to do is fill these in, okay? So let's say your rent is $2,000 for your warehouse. These dollars, and you can add to these, okay? So you guys can add stuff to these. If you guys have any ideas, mention them in the comments. I'll add them in here, please, before I send it to you guys. But all you got to do is add stuff here. You will have to drag this on so that it can, calculate. But essentially, if my rent's $2,000, okay, this is supposed to total. Yeah, sorry. See, I'm breaking my own spreadsheet. I tend to do that a lot. I'll have it fixed by the time you guys get it. Okay, so my insurance, let's say $1,000 a month. My website, let's say $100. Marketing, let's say I spend, I don't know, $1,000 in marketing. Equipment maintenance repairs, I don't have any repairs. Gas, probably like $1,000. So you just fill in these, you fill in all this stuff here, and it'll automatically calculate per month, okay? So this month I made $30,000, and if you double click, it shows you what this number is. Total expenses, including payroll, is $15,100, okay? So this is adding this number and this number. My net profit is $14,900, so my net profit percent. This is the number that I hold myself accountable to, guys, every single month. My net profit percent. I don't care how much we make. I don't care how much we spend. The percentage should be at a point where I'm comfortable, and it should go up, never down, okay? There's no reason why, if we make more money, then yes, we should spend more, right? But it should not be where, we had a lot of expenses this month. Well, if we had a lot of expenses this month, then we should have a lot of income this month. Unless it's like you pay your insurance twice a year, and it's like a month where you made a big payment towards something. But essentially, this is the number that I hold myself accountable to every single month. I look at these every month. For the month of February, let's say we made $60,000. Okay, wow, we had a really good month, but we had, $30,000 in payroll and $6,000 in expenses. And now, even though we made more money, we made less net profit. This is actually, if you guys have followed me at all, you hear kind of what I say about tenths. This is when I decided to stop doing tenths. And I'm not discouraging anybody from not doing tenths, but these numbers, we started looking and we noticed that payroll was the highest one. So the more we started digging into payroll, we found that our tent jobs made the biggest money. We were making thousands of dollars for tent rentals, right? We're doing weddings and festivals. But then the payroll percent, I ended up creating another spreadsheet, and I ended up looking, okay, a tent job, for this tent job, I made, $3,000. Okay, but then for this bounce house job, I only made $500. But then for this tent job, I paid like, 60% of what I made went to payroll. Went to payroll, and then they forgot stuff and they broke stuff, and it was just a hassle. And the time I could have delivered more bounce houses technically. So what I learned for me personally, okay, here we'll start a new spreadsheet. Don't hate me, guys, but If a job makes this much, I know you tech guys might get upset. I'm not telling you what to do, guys. I'm not giving you any kind of advice, okay? But rental amount, payroll amount, net profit, and profit, net profit percent. Now, a lot of us, we look at the amount, right? We don't look at, we don't look at what percent we keep. So if the rental amount is, let's say you did a $3,000 job. Well, let's just keep it even, $2,000 job, okay? And it costs you $500. So your is going to be, minus this. Nope. This is going to equal, 2,000 minus that. Whoops. You guys don't have to do this. There won't be a quiz on this. And then this, the percent you took home, net profit, 75%. Okay. Now, if this $2,000 job, you ended up spending $1,000 paying your guys, then you only took home 50%. But hey, you made $1,000. Would you rather have a $2,000 job and take home 50%, or let's see what a bounce house job. This is honest. I mean, my average bounce house is $400. Okay, I pay maybe $100 for my guys for everything, so I end up making 75%. I did this math, and this is when I decided to no longer offer tents. Okay, I know this is totally off topic, but I said, hey, if I make 75% net profit on bounce houses, okay, why am I bothering with these tents when, sorry, what do I do here? 400, 100. So tents, bounce houses. And you guys can put in your own numbers. So this is where it really starts to work. Would you rather make $2,000 on one tent job and end up with $1,000, or would you rather make $2,000 on a bounce house job, which you end up 20% of that is $400? You make 80%. So I would rather have $2,000 in bounce house bookings versus $2,000 in tent bookings, because from bounce house bookings, I end up taking home 80%, which is $1,600. I'm just throwing numbers out there. Now, obviously, there's more gas. There's more gas going to multiple stops. There's more, stop and go. I get that. I'm just kind of throwing numbers here. But this is the math that you guys should do as business owners. This is the math that I did. I know it's off topic, but this is how we decided that the percentage that we're making from tents, even though yes, we had bigger jobs, I could do $1,000 in bounce houses, right? And spend $200, for example. I'd rather do it that way from a bounce house, make less money because I had less expenses, and that's what we decided. Because of that, we decided to focus on the vinyl the inflatables rather than the tents. So that's pretty much it, guys. This is where I recommend you guys you guys work really hard for your money. Kudos to all of us for being in this industry. It's literally back-breaking work and soul crushing when you're at the end of the season and you're still in debt and like, what the heck am I in business for if I'm in debt my whole life? So this really helped me. I hope it helps you guys. I'll clear these numbers out. Again, anybody who wants a spreadsheet, go ahead and mention it in the comments. I'll share it with you guys. But essentially, ask any questions. I'll shoot it to you guys. The Event Hawk page will message it to you guys, and just ask any questions. I hope it makes sense. I'll clear these numbers up. If anybody has questions in the comments, I'll go ahead and look at those, and I will reply to your comment questions as soon as I can. Thank you guys so much. You guys are awesome. Talk soon.